All right, good evening, everyone. You're listening to Red Pill 78. As always, I am Zak, the corruption detector, and this is another edition of Red Pill News. Joining me once again from Noble Gold, my good friend Collin Plume. Collin, how are you today, buddy?
Zak, I'm doing great. Lots of exciting news, so I'm happy to be on the show today. Thank you.
Beautiful. Glad to have you here. So just in case anybody listening or watching has not heard of you, can you please let us know who is Collin Plume and what is Noble Gold? What do they do?
Well, first father of three, so I got a lot of youngins in my house, so I'm a busy dad, but my side job is Noble Gold Investments, and we help people buy physical metals, people that want physical gold, silver, platinum, palladium. I've been doing it for almost 13 years now. And we do a lot of retirement accounts with IRAs. That's kind of how we got known, but we also, ship gold and silver, platinum to people's doorsteps. And right now, obviously, it's important because of all the turmoil and the banks. And, it's just, as I go to the bank, every few weeks and you see the lines, and I know everyone's gone to the bank probably over the last few months and found that their bank doesn't have enough cash. It raises a lot of concern. And so that's why a lot of people are getting physical metals in their hands as sort of a hedge against everything else that's happening.
All right, good stuff. And if you want to check out Noble Gold, the information will be in the description and the pinned comment of this video. So we just had an announcement today from Jerome Powell at the Fed, and precious metals, as a result, it looks like there's been a bit of a spike. Can you tell us what that means and what's going on?
Yeah, I mean, ultimately, they've announced they're going to continue a lot of the they don't call it quantitative easing, but the bond buying that they're doing, and since COVID, in March, the Fed's balance sheet has more than doubled. They've been pumping a ton of money into the economy. And then you obviously have all the government bailouts for individuals and corporations that are independent of all that. So there's been a lot of, money printing out there. And so obviously that's been a negative to the dollar, strength of the dollar. And, bonds are obviously not a place that a lot of investors want to put their money right now.
All right. Now, you mentioned shortages at the banks. One thing that I have heard about from quite a few people, and I've actually experienced it myself going to local businesses, it seems that that businesses and banks do not have physical change. Like their businesses are being told they can't reorder quarters or nickels, whatever it is. And if you go to the bank, you're unable to buy rolls of change like you would have in the past. Do you know why they would be doing that?
I've been hoarding all the coins. I have them all. I have them in my backyard. I dug a big hole. And I'm waiting for the government to come and make me a decent offer. The mints have been struggling to stay open since COVID. So I think they weren't able to keep up with demand, and which is in a lot of ways surprising, because I think for the most part, most transactions are happening, with a little plastic card. Mm-hmm. But there are obviously a lot of people that want to deal with physical cash. So the mints have been slowing down since COVID. They've opened and closed and opened and closed, and they have not been at full capacity. Also, I believe that they want to move towards more of a digital currency. They've been talking a lot. There's been a lot of discussion about this. So I think they want to move in this direction where everything's more automated, and it's really not a good thing in my opinion, because the more things that are automated that you can't see, everything in my estimation sort of gets rounded up, and there's a lot of money lost in that roundup. Mm-hmm. It happened when we went off the gold standard in the early 1930s, when they told everyone to sell their gold back to the government. They set the price of gold, the ounces, in the $20 range. And then as soon as that passed, about a year later, they jumped the price of gold from the 20s to the 30s. So they basically had almost a 30 or 35% jump in the value of the gold that they owned after they forced everyone to sell their gold back to the government. Now, luckily, not everyone sold their gold back to the government. And that's why, you can find these older coins that are out there from the 20s and 30s and before. But Anytime there is a switching of the guard, you and I, Main Street definitely gets taken advantage of in that swap over.
So even if the mint is not running at capacity, I mean, isn't there a sufficient amount of physical change available in the system that's already out there? Or is it that like people get physical change and like you said, they hoard it? I mean, I'm guilty myself. I've got like a 5-gallon jug that I just drop all of my change in, and then, hopefully at a certain point I take it in and get a couple of $100 back.
Yeah, I mean, they do pull a lot of money out of circulation too. Every year, dollars and change, they pull it out for maybe it's just not legible or, whatever happens to the money. When this thing happened initially a few months back, they actually went to a lot of these companies like Coinstar, a lot of the ones that you would see at supermarkets where people dump, and they were trying to find out what these companies were doing, if they were hoarding money, but obviously they would have no incentive to do that. No, there's not enough. A lot of money gets pulled out of circulation, and so if they don't continue to mint, they can't keep up. And then even going even deeper, farther back, if you look at like pennies and things like that, the actual mining has slowed down too. So not only did you have the mints stop minting, but you actually had the mining companies slow down. Part of the reason that silver was undervalued this year is that for the first 2 months of COVID, most of the mining companies in Mexico shut down. Most of the silver mining in the world is done in Mexico, and it still has not come back to complete operation. Obviously silver rose with that was partly the reason. It's never, in my opinion, it's never one reason that you see a commodity go up. There was a lot of reasons, but that was one of the reasons that they just couldn't get enough of the physical metal, and that will continue. They won't be able to catch up with the physical metal for, I think they said it's going to take another 8 to 10 months to catch up with production.
All right. So silver, I believe it went over $27 an ounce today. Gold was, nearly $2,000 an ounce at one time. But you said it's undervalued. Where do you think silver actually should be? Because 27 is higher than I feel like I've noticed it being historically in recent years.
Well, silver has been, after it crashed in 2011, it's been hovering anywhere from $14 to $19 from, I would say, 2013 to April of this year. So it was hovering in that range for a while. But historically, if you look at the demand, the actual industrial demand for silver, if you think about all the uses that have just grown with silver, I mean, they say that electric vehicles will be 50% of the cars on the road by 2030. They use a lot of silver in those batteries. And then solar panels, another huge use. California next year is going to require that all new homes, all new buildings, all new structures, commercial, residential, apartments, anything, are going to have solar panels on their roofs. So there's a big trend towards electrification. I think it's cost effective. It's a way to keep, to get more self-sufficient, which is, I think, something that President Trump has really been talking about, and the tariffs, and that's why we have been fighting with China for all of these years. So I think that the demand on silver has grown so much, and silver buffs, some people that know, actually silver did hit $50 an ounce in 1983. Yeah. And think about how much money that money is worth today. I mean, what you could buy for $50 back then was a tremendous amount. Today it's not much. I mean, two people could go to lunch and spend more than $50 today. So I think if you look at silver price and you compare it to the cost of everything else, if you really just take a step back, I think people know that it's still tremendously undervalued. And I think in the next 7 to 10 years, I think we'll see silver in the $80 to $100 range pretty consistently, just based on the industrial uses, on the loose money that we're playing with out there. I mean, it's like, Vegas, the Fed just puts money out there. They just keep interest rates low. That's not going anywhere anytime soon. So I think 80 to 100 in the next 7 to 10 years is pretty realistic.
I can totally live with that if that happens. Now, how would you recommend people purchase silver? I mean, there's so many different ways. I mean, you've got like silver bullion, you've got collectible coins. I mean, what to you is the smartest way to do it?
Yeah, I mean, I'm a big fan. Bullion just means anything that's minted in mass supply. So a bullion coin or a bullion bar, it's all considered bullion. And that's what we focus on, especially first-time investors. And, from time to time, we talk about some numismatic or semi-numismatic. And, one of the things that we're talking about this month is this, we have this Apollo 11 5-ounce coin that we've been promoting. And, so from time to time, you'll find a gem. It's this beautiful coin. It's a limited edition coin that the U.S. Mint is making. So I think there's some numismatic coins that people should take a look at. But for the bulk of their investment, you definitely just want to focus on the metal and getting a lot of metal for your dollar. And that's, doing that is through bullion items.
All right. Now, when my girlfriend has an IRA that she's going to be transferring over, and she had some questions about what does that mean? I mean, if somebody has a silver IRA, is that just an equivalent of that money in dollars is held in their name? I mean, how does it work?
So you're basically moving from one qualified account to another. So if she has a traditional IRA or a Roth or whatever it is, it's going to stay the same umbrella. She's going to move that money over and she's just basically replacing those dollars with silver. So, and she'll get, whatever form she wants, ounces, or, how big you can go pretty big in terms of sizes, but she's going to get 1 ounce American Eagles or rounds or 100-ounce silver bars, kilos, whatever she decides. It's going to go to a private depository. You can store in Delaware, Texas, or Ontario, Canada, whatever you would want to do. They store the same way in all the depositories. And so basically, once she acquires the metals from us, we ship it to the depository. They're going to go ahead and open the box on videotape. They will go ahead and weigh and authenticate everything that she purchased. They're going to take a photo. We're one of the few companies in the whole industry. We actually set the trend on this. They will take a photo of her metals, and it'll be signed by the vault manager in the depository. So they'll actually see what she purchased. They'll send her that photo. They'll shrink wrap her silver, slide it on her own shelf, and it'll be stored in a segregated account at the depository, fully insured for any loss, theft, damage, anything that could happen. And then when she retires down the road, once she's above the age of 59 and a half, she could actually take that silver as her distribution for her IRA, or she can liquidate back into cash, whatever she wants.
Is there any difference in the fees that you pay when you withdraw physical metals as opposed to just having it in an account that has stocks or bonds or anything?
Just to ship. You just have to ship the metal. Yeah, there's no difference in terms of the fees. It's called like an in-kind distribution. Basically, you're just taking, your asset in kind. It's one of the few assets you can actually take possession of, and I think it's a nice option for a lot of people because sometimes people, when they start taking their retirement money out, they don't know what to do with it. They don't need it. And to be honest, like if you're just going to put it in the bank and lose money, there's no benefit there to you. So if you don't need the money right at that moment, a lot of our clients take the physical metal, then they store it themselves. And then later on, if they need it for whatever reason, they'll liquidate it with us, or they'll give it to their grandkids, or, whatever they decide to do.
All right. And then is there like some type of fee to have it held in that vault until you decide to take it out?
Yeah. So the annual fees for the custodian and the depository total for everything are $230 per year. And that includes storage, insurance, and that's regardless of the dollar amount. We've negotiated with our depositories that it's a flat amount, which I think is a real benefit because a lot of our clients say, well, what if, I do, 20,000 and silver does go and now my account's worth 100,000. What are they going to charge me? They're only going to charge you that flat $230 per year, which I think is pretty good considering, all the insurance and everything that you're getting for that. And, I've had clients that have bought, 500, 600,000 in silver, which could be a full pallet. I mean, it's an amazing, by the way, I love looking at those photos it's just stacks. And it's like, it'd be like, looking at your great vaults and you seeing all those, and it's the same price, regardless of the dollar amount of silver or gold they're storing. It's all flat rate for them. So.
I imagine Scrooge McDuck jumping into that vault full of coins.
That's what I was trying to remember, but I couldn't remember his name. That's exactly what it is. And it's quite impressive. And that's a it's a fantastic thing. And the good thing right now, the flexibility is so great with metals. That's one of the things I really like. A lot of people right now that have been buying from me for years, they need the money for whatever they need the money for, and it's ready. They're in great profit right now, and we buy it back and send them the money. So it's a nice, clean investment, and it's really easy to get access to it, whatever they need.
Well, it seems like if there is some type of unrest, like we're seeing in a couple of different cities and states across the country, and you're unable to get to the bank, it's also something that you could easily dip into, for trade or barter or something like that.
Absolutely. Yeah. And people ask, what if, the banks aren't, falling apart, or what, during 9/11, when the whole world was shut down, stock market was shut down, the physical metals, precious metals market was still open. Nothing changes for precious metals. So there's nothing that's going to shut down precious metals. So people don't have to be concerned any type of calamity that could happen. Metals are always shipping. They're always being bought and sold. So people don't have to worry about anything were to happen out there. Their metals are safe. And, that market is always open and always moving.
All right. Well, final question. Do you see anything coming up that perhaps is on your radar that maybe other people are not thinking about or talking about?
Yeah, I mean, I obviously the election is like the most glaring, what's going to happen, how that could affect the markets. But, the way I look at it, at the end of the day, the way the money is right now, the way that, we have unemployment above 10%, the way all the debt that's being accumulated, all the dollar devaluation, it doesn't matter who's in office. We may see a little uptick down depending on how the election goes. But at the end of the day, it's like we've created this tremendous debt. Unemployment is high. There's going to be a real estate collapse coming, and I believe it's going to come before the end of the year. I don't know if it'll happen on the residential side, but on the commercial side, there is definitely going to be a lot of problems happening because these commercial notes, these real estate companies are not going to continue to pay for these notes on buildings that they can't fill up. And a lot of people are not going back to a traditional office. A lot of stuff's going to go vacant. So you're going to see that translate down to, a lot of major corporations. And I just don't think that the stock market can hold up when you have basically all the wealth in 5 companies. I think that's, in my estimation, that's fool's gold. Yes, for a while it can be held up, but eventually, there's going to be some cracks in the armor in terms of the stock market, and I think we're going to see a correction, some kind of pullback before the end of this year also.
All right. Well, just actually one more question, because one thing that's been talked about a lot is a return to the gold standard. Yeah. Do you think it's possible that, given the fact that they are printing money and it's just it's monopoly money, is there a possibility that we could go back to some type of hybrid precious metals standard for our monetary system?
Yeah, there's a Representative Mooney who's tried to get a few bills passed. He even put one more recently on the floor. The first one he put last year sort of got laughed at, but now I think people are starting to take him serious. Not only does he want us to potentially go back to the gold standard, but he also wants an audit, which I think that's the thing that really is scaring a lot of folks. Ron Paul always talked about, ending the Fed and doing an audit of our accounts and seeing what we have at Fort Knox. And we've never done it. We've audited the Bank of New York for gold. We did that about a year and a half ago because we were forced to. But in terms of Fort Knox, how much gold is there? We haven't done it. There's been nobody in there that's seen what's happened since 1983. So I think we're pushing towards getting some transparency about what gold we have and what's in there, because once we do that, then the next step would be, can we back, some of our currency with gold? And I think it would be a great thing for the average person, because the average person is not so willing to go into debt to fund their future. And really, that's where we're going. Everything is just focused on you taking on more and more debt. I think the average person wants to put money away. They want to save. They want to grow their portfolio, and they're not willing to just constantly gamble to hopefully have this great life down the road. So I hope that eventually we go back to some kind of standard and we get away from where it's just, money printing and cheap money, because I don't think it's healthy in the long run for our economy.
I have to agree with you there, and it seems like more and more it's happening all across the world. I mean, every country is basically in the same situation. And what is it? Is it Zimbabwe? Somebody sent me like a $5 billion note from Zimbabwe the other day. I mean, if it can happen anywhere, I mean, it could happen anywhere else. So
you couldn't even buy a cheeseburger at McDonald's with that $5 billion.
No, I have no idea what its value is in American dollars, but I can't imagine it's very much.
You can get it on eBay, I think, for like 90 cents or something like that. I have a number of. I usually actually have them in my desk, but I don't have them in this office here. But yeah, they're pretty fun. And I mean, listen, Zimbabwe. What happened there is it's not that unusual. I mean, yes, their hyperinflation happened in a short period, but like at the end of the day, I mean, every fiat money has that to some extent. Theirs was really blown out of proportion, and obviously they had a ruthless dictator that was manipulating things, and those things can happen. But I don't think, if people look at their money today, and if they went back even 10 years and they just thought about all the things they buy on a day to day, our inflation here is pretty rampant. I think we're probably 9 to 10% a year, even though the government says 2%. So I think it's something that we're all dealing with. It's just not right in front of our face. So we don't always see it.
Yeah. All right. Well, Collin, I appreciate you coming by again, brother. Thank you very much for your perspective.
Absolutely. Thanks, Zach. Talk to you soon.
Talk to you soon. Hey guys, one more thing. I just want to thank everyone for watching today. If you have not subscribed yet, I urge you to please consider subscribing. There will be a couple of videos that pop up if you want to continue to watch. There's also some ways in the description of this video that you can follow me on other platforms. Please consider doing that as well. And if you want to support the program directly, there are means to do that below as well. Thank you all for your support over the last couple of years. Consider liking and sharing this video and help me get the real news to people who don't yet know they've been lied to.